Bismillah ar-Rahman ar-Rahim. Welcome dear student in the fourth year at the English section. This is Ahmed Hamza, teaching assistant in the Department of Business Administration. We will talk about the fundamentals of financial management. First, through true or false questions. First question. Recently, the emphasis of financial management has been on the relationship between risk and return. This is true. Generally speaking, the field of finance integrates concepts from economics, accounting, and a number of other areas. The relationship of risk and return is a central focus of the financial management. So, financial management generally focuses on the relationship between risk and return. Second question. Top managers are responsible for making organization-wide decisions and establishing the plans and goals that affect the entire organization. This is true. Where top managers who are upper level management are responsible for making wide decisions and responsible for establishing the plans and goals, the middle management or first line managers, called project leaders and store managers or division managers. The lowest level are first line managers that work or manage the work of non-managerial employees who typically are involved with producing the products or serving the customers. At the bottom, we can find non-managerial employees. This is the traditional pyramid form of management levels. The following question. Financial management is one of the main functions of the management functions. This is false. Financial management is a business function that deals with investing the available financial resources in a way that greater the business success and ROI. ROI is a return on investment. Here we should differentiate between two things. First, management functions, and on the other side, organizational functions or the functions of the company. First, management functions are planning, organizing, directing or leading and controlling، اللي هي وظائف الإدارة، التخطيط والتنظيم والتوجيه والرقابة. On the other side, organizations functions that are accounting, marketing, human resource management, financial management, maintenance, production or any department of the organization. So, financial management is considered as one of the organization's functions. The following question. Management of the financing structure is one of the main tasks or responsibilities of the financial manager. This is true. It can be classified into the following 6 aspects. Here we can say that the main responsibilities of the financial manager that are: first, forecasting and planning; second, management of the structure of the assets of the enterprise; third, management of the financing structure. 4. Coordination and control. 5. Dealing with financial markets. And finally, risk management. The following question. Creation of effective financial policies is the only objective of financial management. The answer is false. There are many objectives of financial management that are assessing capital needs, determination of capital structure, creation of effective financial policies, resource optimization, and finally profit maximization. The following question. How investors handle risk is an important topic that usually only economists observe. Of course, the answer is false. Behavioral finance is something that the finance industry puts heavy emphasis on. So, the field of finance integrates concepts from economics, accounting, and a number of other areas. Dividends paid to corporate stockholders have already been taxed once as corporate income. The answer is true. This is in the statement of income or income statement. Question number 8. Institutional investors have had increasing influence over corporations with their ability to vote with large blocks of stock and replace poorly performing board of directors. This is true. 9. Timing is not a particular important consideration in financial decisions. Of course, this sentence is false. Timing is so important. Where the critical decisions that financial managers can take is very, very important for the performance and efficiency of the company or organization's performance. Number 10. The higher the profit of a firm, the higher the value the firm is in the market. This is false. It means that it's not necessary for the company when it has higher profit to be with the higher value in the market. Second question. The following question. Financial management is the art and science of money management. That is true. Financial management is a business function, as we said, that deals with investing the available financial resources in a way that greater business success and return on investment. At the same time, it's considered with the probability of using other or probable resources in the future. Possible resources in the future. Financial decisions are pending decisions. This is true. Financial decisions are pending decisions of the enterprise in most cases, which requires extreme care when making these types of decisions. Following question. Capital budgeting focuses on how should we pay for our assets. It's false. Capital budgeting deals with what long-term investments or projects should the business take on, where capital structure deals with how should we pay for our assets and should we use debt or equity. Second type of question, multiple choice question. First, what should be the primary goal of financial management? Increased earnings, maximizing cash flow, maximizing shareholders' wealth, or minimizing risk of the firm. The answer is number C, maximizing shareholders' wealth. Second question. Behavioral finance is the study of how investors react to accounting-based profit fluctuations, how investors react to interest rates and foreign currency fluctuations, how investors react to certain ways to diversify a portfolio, or how investors react to the amount of risk versus the amount of return in securities. The answer is C. How investors react to certain ways to diversify a portfolio. Third question. Proper risk return management means that the firm should take as few risks as possible. The firm must determine an appropriate trade-off between risk and return. The firm should earn the highest return possible, or the firm should value future profits more highly than current profits. The answer is B. The firm must determine an appropriate trade-off between risk and return. Here we can say that the main focus of financial manager is making a balance between profits in the company and the risk. I mean the risk and the return. One side risk and the other side return. Agency theory examines the relationship between the shareholders of the firm and the firm's investment banker, owners of the firm and the managers of the firm, board of the directors and large institutional investors, or shareholders and the firm's transfer agent. The answer is B. Owners of the firm and the managers of the firm. Agency theory deals with the issue of when to hire an agent to represent the firm in negotiations, the legal liabilities of the firm if an employee acting as a firm's agent injures someone, the limitations placed on an employee acting as a firm's agent to obligate or bend the firm, or D. The conflicts that can arise between the viewpoints and motivations of a firm's owners and managers. The answer is D. Following question. A financial manager's goal of maximizing current or short-term earnings may not be appropriate because it fails to consider the timing when shareholders want increased earnings and may instead consider the manager's own goals. Increased earnings may be accompanied by unacceptable higher levels of risk. C. Earnings are subjective. They are be defined in various ways such as accounting or economic earnings. Or D. All of the options are true. The answer is D. All the points are true. Maximization of shareholders' wealth is a concept in which increased earnings is of primary importance. Profits are maximized on an annual basis. Virtually all earnings are paid as dividends to common stockholders. Or D. Optimally increasing the long-term value of the firm is envisaged. The answer is D. Which of the following is not true statement about the goal of maximizing shareholders' wealth? A. It takes into account the timing of cash flows. It's a short-run point of view. It considers risk as a factor. Or D. None of the options is a false statement. The answer is B. It's a short-run point of view. The following question: what is the major difference between money markets and capital markets? One is more domestic while the other is more international. One includes stock while the other includes loans. The size of profit or return on the market. Or D. The timing of how long the security will be held on to. The answer is B. Thank you.